Hey guys, it's Carter. Welcome back to the channel. In today's video, we are looking at a company that has been in the news a lot, a company that's been getting talked about by you guys, asking questions. Carter, should I buy this stock? 3, a company that I've been investing in for years. It's Meta, also known as Facebook. The year-to-date return for this company is down 60%. We're going to be looking at what's going on with the company and answering that question of should you buy this stock. And by the end of this video, you guys will learn the best strategy for investing and should you even buy it. So starting off, what is Meta? Well, Meta is also known as Facebook. They recently changed their name last year, but overall, this company owns Facebook. They own a whole bunch of other things like Oculus, and in the past year, they've really focused on the metaverse, right? They've invested billions of dollars into the metaverse, into Oculus, to create the next so-called universe. Now with that, they obviously expected a huge rise, but what we've seen in Meta or Facebook is sell-off, right? The company sold off 60% in value and their revenue is down about 4% this year. And now Facebook and Google are actually very, very similar just because they make most of their money off ad revenue. But as of today, ad revenue is at a significant decrease, and a lot of analysts think that this trend is going to continue for 2023. But over the past year, what's been kind of happening is they've been using all their leftover profit and investing it back into the metaverse, into other companies that is designed for the metaverse. And what we've seen is not a huge return on investment with that money. Because looking at the fundamentals, you guys will notice there's a lot of red. We've seen a decrease in revenue, diluted EPS, net profit margin. So it's just not a good situation right now with Meta. Also, what we've seen in the past couple of days is Meta actually gotten sued for over $400 million. This is because they forced users to accept targeted ads, which goes against policy. You can't do that. But overall, what we've seen and why we've gotten sell-off is one, just decreasing ad revenue, decrease of active users on Facebook. For the first time in company history last year, we've seen a slowdown of Facebook users just because the company makes 85% of their revenue off of Facebook. And if you're getting a slowdown of that, that's going to cause a lot of investors to sell their stock and not want to worry about it. So we're getting slowdown on ads, slowdown on revenue, and just unshaky and not very good spending. Getting sued, it's just not a good situation right now for Meta. But yes, I will have to say this, they do have some good news, is yes, anytime a company like this sells off 60%, there's really 2 mindsets you can have with it. The first mindset, this thing's on a massive downward trend, I'm not gonna touch this thing with a 100-foot pole. The second mindset is, oh my gosh, this thing sold off 60%, I'm gonna invest as much as I can because it's, way undervalued. There's a huge upside, the revenue's killing it, but it's not, and everything looks solid. So I definitely think right now for Meta, it's just not a good opportunity. I always look at companies like this, and yes, you could make money in the short term just because the average analyst price target for Meta is $147, which is a return of 60%. Which is decent, right? That's decent. And that's if those price targets are correct. But looking at Meta, for me, I just think of opportunity cost. Meaning, if I invest my money here, I take on a ton of risk, I take on a company that's losing money, getting fined, not spending their money correctly, investing into a very risky sector. Yes, that could take off, but high risk, right? So 5 major issues with the company. Or I could take that same money and instead of investing it into Meta, I could just invest it in the S&P 500, which is down 20% and has a history of always rebounding. There has never been a time over the past 90 years where the S&P 500 has never rebounded. So, opportunity cost, meaning should I invest into Meta, high risk, high reward, which even the max reward is 16%, that's the average analyst price target, or I invest into, S&P 500 where I know previous history says it always recovers and investing in recessions is always the best time to invest. So for me, I just think there's better opportunity elsewhere. Not saying you can't make any money from Facebook or Meta. I just think the risk tolerance is too high, especially, for me, 2023, I'm really focusing on dividend players, high growth, you know, and just reducing my volatility and a lot of my risk in my portfolio, and I'm just gonna be staying away from it. I just don't see the value there. I do own some Facebook shares. I'm just not gonna add in. I'm pretty much just holding and not selling any of them. You know, I do keep it under, you know, 1% of my portfolio. So for every $100 I had invested into other stocks, bonds, ETFs, I'll put $1 into Facebook just because it's better to have some. You know, if this thing squeezes up, I make a couple of bucks, but if it tanks down, I'm only out 1%. And that's kind of my mindset, my plan with it, guys. So I hope you guys enjoyed it. If you have any questions, let me know down in the comments. And guys, don't forget to check out my blog. You know, we post every single day talking about stocks, money, pretty much everything money. So make sure you guys check that out as well. So we'll see you guys later. Take care.